Welcome to Goodwill Commodities educational video tutorial. In this video tutorial, you are going to see what is contract value. Understanding contract specification is very important before you do commodity futures trading, because contract specification provides you the detail about size of the contract, price unit, and also the margin requirements in order so that you can calculate the value of any contract. If you want to know how to calculate the margin requirement for a particular contract, you should know how you should calculate the contract value, because margin requirements typically are a percentage of the contract value. Where do you find the details? Go to MCX website. In the website, search for the products. In the products, you can see the list of all the commodities. Choose any particular commodity for which you want the contract specification. For example, I am going to choose crude oil. After clicking crude oil, you will see this page, which gives you some introduction and details about crude oil. But our focus is identifying or finding contract specification for crude oil. On the right hand side, you can see contract specification. So please click on the contract specification. Now you can see the contract specification for the current and the upcoming futures contracts for crude oil. Click on any PDF file. Now you can see the contract specification for crude oil, which includes simple description, but our focus for calculating the contract value is on the trading unit. The trading unit for a particular commodity and for a particular contract. You can see the trading unit and the base value, quotation and the base value, and the tick size, and the most important thing is initial margin. You can see these details which will be useful for us for calculating contract value. In order to arrive the contract value, just multiply the quote value and trading unit. In the contract specification, you can notice that here they had mentioned quotation slash base value as rupees per barrel. So what you are seeing in your trading terminal is for 1 barrel of crude oil, and the trading unit you can see it is 100 barrel. The price which you are seeing in your trading platform, you can see here, is for 1 barrel. That is the quote value. Whatever you are seeing, what is offered is for 1 barrel. Now we can calculate the contract value for crude oil. For easy calculation, I had assumed that 1 barrel is rupees 6,000 rupees, and the trading unit is 100 barrel, so which is also called as lot. So how I can calculate the contract value? Just multiply the quote value and the trading unit. 6,000 multiplied by 100, which is the lot size, that gives me the contract value, which is rupees 6 lakhs. Now I have calculated the contract value for crude oil. As I told you earlier, in order to find the margin requirement for a particular contract, we need contract value. Let us see how we can calculate the margin requirement for crude oil. As I told earlier, margin requirements are a part of contract value. In the contract specification, we saw the margin requirement for crude oil as 5%. It may vary based upon the price volatility. So now let us assume 5% is the margin requirement for crude oil. So how to calculate initial margin? Just multiply the contract value by 5%, which provides you 30,000 rupees is the initial margin required for trading crude oil contract. This is how you can calculate initial margin. Do the same for other commodities and learn fast. Let us see how to calculate the brokerage for a particular transaction. Brokerage is a percentage of contract value. Brokerage varies from broker to broker. For example, let us assume we are charging 0.01% as the brokerage for the earlier example which we took for crude oil to calculate the contract value. So, in the earlier example, the contract value for crude oil is rupees 6 lakhs. Just multiply the contract value by the percentage of brokerage. So, in this particular case, we had assumed that the brokerage is 0.01%. Just multiply this and the brokerage is rupees 60, which is the brokerage. Brokerage is a part of contract value. It may be a purchase or a sale. Keep watching our other educational videos to learn more about commodity trading. In the next video tutorial, we will be explaining you about settlement price and how your profit and loss are added to your trading account on daily basis. Thank you.